So recently I have opened junior ISAs for my two kids, and I thought I would share with you today my thought processes, the options that I looked at for them, and kind of the pros and cons that I weighed up when I went about choosing these junior ISAs for my children. Hello, welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup, and I've been thinking a lot about my kids' finances recently, and I want to make sure they get off to the best start in life. Now, what was really important to me was making sure that we were saving money for them regularly, and meaning that they would have some money when they got to 18 that they could use for university or buying houses or getting married or traveling or anything that they want to do when they reach adulthood. So before I start, I'm going to be talking about my experience in this video. So this is going to be what I went through when choosing my kids' ISAs. So this is personal to me. I am not giving you advice. I am not telling you what to do, and it's not for you to copy me. This is just me talking through my experience, and I'm going to be talking about investing too. And I went into this knowing full well that my investments could go up and they could go down as well. So you need to remember this when you consider investing options as well. So I would love to share with you what I went through, but first off, let's talk about what a junior ISA is. So a junior ISA is an account that's available here in the UK. Now, it is a tax-free account for those that are under 18, and it needs to be set up by a parent. It is tax-free, which means that if you make any money on interest, or if you're looking at investment options, if it grows, then you won't pay any capital gains tax or dividend tax on any money that you make within that account. Now, this is particularly good because if you put the money elsewhere or you kept the money in your own account, you might be liable for tax on that depending on the type of account that you use. Now, kids' accounts have an ISA limit of £9,000. So this is less than the adult limit, and this needs to be shared over the two available ISAs that there are for children. So you have two options when considering a junior ISA for your kids. There is a cash version, which just means you are putting money in, you are earning interest on it. It's like a savings account, but it is in this tax-free wrapper. There's also the stocks and shares version of a junior ISA. So this is where you put money into the account and then you go on and you invest this in the stock market, commodities, whatever you like, whatever's available on the platform that you choose. Now, obviously, when you're considering the cash option, this is going to be in line with whatever interest rates are available. And at the moment, as I'm recording this, the interest rates are pretty low. So that was a big consideration for me, was that if I was putting money away from my kids, actually that money is likely to be worth less in the 15 years that we've got until they can access it than it is as I'm putting it in because of inflation. So inflation is likely to go up faster than the rate of interest that money would receive. So the value of that money is going to be less in 15 years than it is at the moment, even though I'm paying into it regularly. However, if I look to go down an investment route, I stand a chance to actually beat inflation. Like I say, there's some risk, but I'm going to go about this investing for my children, thinking fairly long term, trying to minimize that risk, and actually with the hope that that is going to exceed the rate of inflation and actually grow so that the money in there will be worth more than the actual money that I put in. So if you're looking into this option for your own kids, you could choose to have one of each type of ISA. You could have a cash ISA and you could have a stocks and shares ISA. The only thing that you need to remember is that that £9,000 needs to be shared across the two. So you could choose to put £4,500 each tax year into the cash ISA and then £4,500 into the stocks and shares ISA, or any other combination of amounts. So 8,000 in this one and 1,000 in that one. Just remember that you cannot exceed that £9,000 per tax year. The other thing to remember about junior ISAs is once the money is in there, that money can't be accessed until your child turns 18. At that point, that money is theirs and they can access that, or they can continue to save it or invest it, whatever they want to do. There is one other thing of note, and that is if you choose to have a cash ISA for your child, they can also, when they turn 16 or 17, they can also get an adult cash ISA. So this means that they can access the £9,000 available in the junior cash ISA and also the £20,000 limit in the adult cash ISA. You can't do this with the stocks and shares ISA, but if your kid's got like £29,000 knocking about when they're 16 and 17 per tax year, then they have that option available to them. You can also set up a junior ISA and then change your mind about the place that you've decided to put it. So I'm going to be talking about the two main companies that I consider today, and I am considering later, once I've built up a bigger pot, moving from one to the other. And that is something you can do. There are systems that are available. What you can't do is have more than one of these accounts set up. So I can't have two stocks and shares ISAs set up for one kid. I can have one cash ISA and one stocks and shares ISA for each of my children, and they can have these accounts each, but they can't have two of each type or two or more of each type. So that's the basics of the junior ISA. Essentially, they're pretty simple. They're just a kid's version of the cash and the stocks and shares ISAs that are available to us as adults. They have a lower limit, and they also have this, you can't access it until you're 18. So I had to make a choice about where I wanted to open these accounts. Now, my first choice was Vanguard. So if you've watched some of my other videos and heard me speak on other platforms, you will know that I did the majority of my investing in Vanguard. I used their Life Strategy 80 fund. I also have recently started a pension up with them, which I'm paying small amounts into. At the moment, my focus is on putting money into my stocks and shares ISA with Vanguard. Now, the reason that I like Vanguard is because they have low fees and they're super easy to use. So the account fee with Vanguard is just 0.15%, which is pretty low when you compare it to others on the market. They also have options like family and friends can pay into your kids' junior ISAs, and you get access to Vanguard's range of funds. So these are all pros for me when choosing junior ISAs for my kids. I know the platform, I've got both my stocks and shares ISA there and my pension in there, so that would be a simple choice for me to go with them. The other thing with this is that these are stocks and shares ISAs, so they don't have a cash ISA version with Vanguard, and the other provider that I'm talking about in a minute, they also don't have a cash ISA version. I'm just looking at stocks and shares ISAs for my kids. So this is a good choice for me. Now, the downside of me choosing Vanguard, and ultimately the reason that I opted not to go for them at this point, was the fact that there are minimum amounts that you have to pay in. So the minimum amount is either 500 lump sum or £100 per month. So my kids don't have £500 each at this point, nor do I have £100 per month for each of my kids, so £200 a month available to pay into those accounts. So that kind of was somewhat frustrating because I wanted to open an account with Vanguard that would have been perfect for me given my experience on that platform. However, these minimum amounts put me off at this stage because I wasn't quite ready to make that commitment to my kids' savings accounts. So that's why I wanted to look for an alternative. Now, given that I'm already using multiple investment platforms already, I wanted something that was super simple, and particularly around my kids' investments, I just wanted a simple plan that I could pay into and pay in small amounts until I was ready to move to Vanguard. So this is why I have chosen to start junior at stocks and shares ISAs for my kids with Wealthify. So Wealthify keep it really, really simple. They basically have two options for investing. They have their original plan and they have their ethical plan. Now, the fees for these differ between the two plans. So they have a general account fee of 0.6%, which is obviously much higher than Vanguard at 0.15. However, they also have different fund fees, which are also higher than the ones in Vanguard. The typical fund fees in Vanguard are around, I think, 0.2, 0.3%, and that comes out of the growth that you get within those funds. So in Wealthify, they also have these fund fees. On their original plan, they say they're about 0.16%, But on their ethical plan, which was more interesting to me, it is 0.56%. So these are a lot higher than the fees that you're getting on Vanguard, but they also make it super simple. Like I said, there are just 2 options. It was really easy for me to open the accounts for my kids. And the biggest perk of this one is that you can start investing into these accounts with as little as £1. So I was able to open my kids up with a £50 starting pot and set up a transfer, an automatic payment into that account of £25 each per month. Once I think I've built that account up a bit, I will maybe look at moving that to Vanguard just to streamline our investing strategies, and because then it'll be all in one place. So when I'm checking on my own accounts, I can check on the kids' accounts. So either as our income increases and we can reach that £100 per month, or once we've built up enough of a pot in there that it reaches the £500 minimum for the Vanguard fund, I will probably move that over. But I am open-minded. I am open-minded about the idea that it might actually work out really easy to keep using Wealthify, and I'm also open to the idea that we could get some great returns on that platform. The app itself with Wealthify is really easy to use. I can do it on my phone, and I can be flexible about the payments that I put in. So I've set up an automated payment for those accounts, but I could set that to manual and just add money in when they get money from birthdays or Christmas or pocket money. So it's really flexible in that regard, unlike Vanguard. So those are the 2 platforms that I investigated for my kids' junior ISAs. It was quite a lot of research because obviously I wanted to get that right. And actually I'm really happy that I've settled on Wealthify now. I'm also really happy that I've done the research into Vanguard, so I have that as an option later on if I wish. I hope this video has been helpful to you, seeing my journey around looking into my kids' finances. If you found it really useful, then leave a comment below and let me know what you thought. What decisions have you made around your kids' finances, and have you opened junior ISAs for them? If you want to see my future videos on this topic, I will probably do updates on how their accounts are doing and how my own accounts are doing. So make sure you hit that subscribe button so that you can see all of my videos as they pop up. Thank you for coming along to watch today. It's been great to have you here, and I'll see you in the next video.